Three people buy their first home in the same year, in the same city, for roughly the same price. Same keys, same smiling photo, same "we finally did it" moment outside the front door. But one walks into mortgage stress. One walks in exhausted, proud, and cautiously stable. And one walks in with mum and dad quietly carrying half the risk. So the real question isn't who bought first, it's who actually paid the highest price. Buying your first home in Australia is treated like this magic checkpoint. Once you've bought, people act like you've escaped. You're secure, you've made it. But two people can both be first home buyers, both have a mortgage, both post the same smiling photo online, and one can be quietly drowning while the other is choosing furniture without checking their bank balance. So let's talk about the three types of first home buyers in Australia, and why the same milestone can create three completely different lives after settlement. Buyer number one is the "we got in, but at what cost" buyer. This is the buyer who scraped everything together. They emptied savings, sold the second car, sold random stuff on Facebook Marketplace, cancelled holidays, picked up extra shifts, moved back home, stopped eating out, and maybe used a family guarantor because the deposit wasn't enough on its own. By settlement day, they look financially dragged through a hedge. Everyone congratulates them. You did it. You're in the market. Best decision ever. But right now, they got the keys with almost nothing left. They have a home, but no buffer. A mortgage, but no breathing room. A front door, but an emergency fund that looks like spare change. This buyer lives with a constant low-level hum in the background. Interest rate movement, stress. Council rates, stress. Car insurance renewal, stress. Hot water system making a weird noise, that's a financial jump scare. Buyer one is technically ahead, but emotionally they can feel trapped. Their life gets smaller. Every purchase becomes a calculation. Every dinner out feels irresponsible. Every unexpected bill feels personal. And the hardest part is, they can't really complain. Because if you say, "I'm struggling with my mortgage," someone will always say, "Well, at least you own a house." And yeah, that's true. But it doesn't mean the pressure isn't real. Buyer one didn't just buy a house. They turned their entire life into a deposit machine, then walked into the mortgage with no armor left. Same keys, same photo, completely different aftermath. Buyer number two is the "we did it ourselves" buyer. This buyer has been renting for years. No giant cash gift. No parents casually saying, "we'll cover the shortfall." No investment property being transferred. No secret family trust. Their help is mostly emotional support, moving boxes, and someone's uncle with a ute. They save the slow way. Every payday, money moves into the deposit account before they can touch it. They compare bank accounts, cut subscriptions, cook more at home, and tell themselves, just one more year. Then another year passes. And while they're saving, the market keeps shifting. They spend weeknights scrolling realestate.com.au, saving listings they can't quite afford yet. They start with Inner West apartment and end up at technically still Sydney if you don't zoom out too far. At inspections, every couple looks exactly like them, except somehow everyone else seems to have an extra $150,000 hiding somewhere. Then auction day comes. Buyer two has done the spreadsheet, they know their limit, they promised each other they won't go over it. Then the bidding jumps past their limit in 90 seconds, and they drive home in silence. That's buyer two, not reckless, not lazy, not bad with money, just stuck in a market where doing the right thing still feels painfully slow. Eventually they get there. Their place might not be perfect, it might be further out. The kitchen might look like it was designed during a time when brown was considered a personality, but it's theirs. And unlike buyer one, they probably kept a buffer. Not massive, but enough that a broken appliance doesn't destroy the whole month. Buyer two has pressure, but they also have pride. They remember every weekend they skipped, every time they got outbid, and every awkward conversation about whether they should lower their expectations again. They didn't hack the system, they just outlasted it. Same keys, same photo, but this time the aftermath is tired, proud, and cautiously stable. Then there's buyer number three, the property market on tutorial mode buyer. This doesn't mean buyer three is a bad person. If your parents can help you, most people would take the help. But let's call it what it is. Buyer three is playing a different game. They say, "I'm thinking of buying soon." And you think, fair enough, they must have been saving hard. Then you find out saving hard means they saved a bit. and mum and dad added $250,000 because they wanted them to get a foot in the door, or the parents went guarantor using a fully paid off home, or the grandparents helped, or there's already a property in the family that somehow becomes part of the plan. Suddenly, the first home buyer journey looks completely different. Buyer 3 isn't spending 5 years eating leftovers to build a deposit. They're not lying awake wondering if one more rate rise will break them. They're not getting outbid and sitting in the car questioning their entire life. Their sacrifice might be buying an apartment instead of a townhouse. And again, that doesn't make them evil, but it does make the comparison ridiculous. Because from the outside, all 3 buyers can look the same. They all inspected properties. They all signed contracts. They all complained about stamp duty. They all posted the keys. But buyer 1 used every dollar, every favor, and every ounce of stress to get there. Buyer 2 worked their way there step by step. Buyer 3 had a financial trampoline underneath them the whole time. And this is why the just work harder advice can feel so insulting. Yes, discipline matters. Saving matters. Income matters. Avoiding dumb debt matters. But pretending the starting line is the same for everyone is fantasy. In Australia, family support has become a massive hidden advantage. A $50,000 gift doesn't just add $50,000. It can help someone buy sooner, avoid lender's mortgage insurance, reduce the loan, and keep an emergency fund after settlement. Government schemes can help, but they don't erase the gap. Buying sooner with a smaller deposit can still mean a bigger loan, higher repayments, and less room for life to go wrong. So the question shouldn't just be, can I buy? The better question is, what does my life look like after I buy? Can you still sleep properly? Can you handle repairs? Can you keep saving or investing? Can you survive if one person loses work, takes parental leave, or has a rough few months? That's the difference between owning a home and being owned by the mortgage. If you're buyer 1, getting in is exciting, but a buffer matters. A house with no breathing room can turn into a very expensive cage. If you're buyer 2, you deserve more credit than you give yourself. Doing it without major family help in today's market is genuinely difficult, and slow progress still counts. And if you're buyer 3, good for you. Seriously, but understand that your journey isn't the universal one. Being helped doesn't erase effort, but it absolutely changes the difficulty level. The real takeaway is that first home buyers aren't one group anymore. There are buyers stretched to the edge, there are buyers grinding their way in, and there are buyers whose parents quietly change the entire equation. Because in today's market, the first home buyer story isn't just about who worked hard, it's about who had backup when things got hard. So when someone says, I bought my first home at 28, don't just ask what they bought, ask what it actually cost them. Subscribe for more Australian money videos, and comment which buyer you see the most.